Good day. Ira Epstein of Linn & Associates with your metals market wrap-up for this Tuesday, the 7th of July, 2020, about 5:30 p.m. Central Time. So we had a down day in stocks. Tonight, at least in the early night, they're getting a bounce. We had a nice up day in the metals. We're getting a bit of a correction to that. Dollar slightly higher on the close. Euro settling back just a little bit right now. When we take a look at bonds and notes, well, flat. You know, you've just been hanging at this 0.67, 0.69 area for a long time in the 10-year note. The market's just drifting sideways. As we take a look at gold on a weekly chart, you can't get away from the fact that for years now, this is a new high area for the week, and we're only getting into Wednesday right now. So this is the middle of the week we're getting into. We're up $16. Not a lot, but still a nice move, and the market still looks bullish. When we take a look at this chart, you can see how the market has been moving up. You can almost see that trend line right on the bottom there, but you're not in a swing line trend. The market continues to have a pattern of a higher high, a lower low, comes back, makes a higher high. You certainly don't need a lower low at this point. Again, what you'd like on any correction now is for the market to find its footing above 1766.30 to give it that pattern of higher lows, higher highs over the 18-day average of closes. Now tonight the market has moved where the 18-day average is over this last low of 1766.30, and that is a positive development. So it means the market can afford to pull back, get a bit of a correction, but it does not mean the market's going to fall back enough to really hurt the market. We don't know. We don't see that. I can tell you where the resistance is. It's the upper Bollinger Band. So the question is, can the market make it to it? What the market keeps doing is it went to the band 4 days ago, fell back. Now the question is, can it continue on and run to the band again, or is it going to stall right in that area that it did before, which was the 1807 area, and that's about where we're trading right now. In terms of momentum, it's as bullish as I need. So I have the slow stochastic embedded. Embedded means it converted from an overbought condition. The traditional chartists look at it like this. The market typically travels between, they say, 20 and 80. I can't argue. That's what they'll say on the slow stochastic. I say it also, besides that, can change its nature, its personality, and suddenly when both numbers start going sideways over 80 and stay that way, the market develops a new level of bullishness. And this developed right there. You can see you made your run to the upper Bollinger Band. Yes, you corrected a little, that's okay. But as long as both these numbers are staying over 80 as they are right now, who am I to say, hey, you can't go even higher? I think it's there. By the way, look for me on Thursday. I should be getting a haircut tomorrow. I finally have an appointment. In the gold-silver ratio, well, you're under the 18-day average, but basically you've been hanging at it. You know, you can take all this, which was the big break in it, and then we've just been going sideways, hanging here at a ratio of 97 to almost 1. So you need almost 97, 98 ounces of silver in a perfect world. Take it to your store, no commission or anything, and you get 1 ounce of gold. I remember when it was a heck of a lot lower than that. In the silver market, the market is stuck in these Bollinger Bands. Now, the black dashed line is a Bollinger Band, which is an algorithm designed to keep the market trading within it 95% of the time. Normally, they're wider, but they do narrow in just the way they did here. And when they narrow in and start going sideways, eventually to come out of that, and they will come out of it, you have to build power, and that's the spinning. You can almost say you're in a pipe if you think about it. Think of that as a pipe, price is spinning, and you get frustrated because you're looking just like in gold for it to continue on. It hits that upper band, pulls back, and that's what silver is doing right now. The chart pattern is one of lower highs, higher lows. You're not in a trend here either. You certainly have upside bias. You're over the 18-day average of closes. In the copper, I keep telling you, it's just, you've got the embedded reading. Supply threats are happening with the COVID-19, and economies are opening. I think the pros are consistent buyers on pullbacks until they stop doing that. And when will you know? Often the red line will get under 80 and close there before the market price turns on you. You keep your eye on that. Until that occurs, I'm of the opinion the pros will continue to buy the pullbacks until they lose that. And on the pullbacks, as they accumulate, they'll look to pop out against the upper Bollinger Band, which can keep creeping higher. It's not in a sideways pattern like we're seeing in silver. Like silver, platinum is in that pattern. You can pretty well see it right here. Different than silver, it has a pattern of higher lows, higher highs. Now to break out, when you eventually break out, let's assume it's a breakout to the upside, just for the sake of it. It is very typical to become overbought first and then the two numbers get over 80, but you're not even close to that. So I still see a lot of resistance, not a breakout happening at the 867 level, the upper Bollinger Band. Palladium's the identical thing. Look at the sideways action. This is classic, by the way. So every now and then you get an opportunity to show you something that's classic. Classic sideways pattern in the tube, the Bollinger Bands, overbought condition, making traders that are trying to pick a direction, they're frustrated. You don't go up, you don't go down. What number are you hanging at? That 18-day average of closes, what we call the line in the sand. And in the dollar index, if you knew nothing else, in the dollar right here had a pattern of higher high, lower low. If you take out this low, you'd end up with lower highs and a lower low. The number that the market might go to is the lower Bollinger Band. And today, if you take a look, the low of the day, 96.50, you hit 96.54. That's exactly what occurred. You're in a downtrend, not oversold. Can the market push out of this narrow band that it's been forming now for the past week and a half? That's what we're about to find out. And we'll write about this because what we do at Linn is we write on all the markets for futures traders that they typically don't get in other places. You think I don't look all over the internet? I do. The problem is they're not telling you in most of those letters who's doing the buying, who's doing the selling, how many option trades were made today, which skew were they in. Then you can get into the fundamentals of the market. We really specialize in the fundamentals. And I, as you know, specialize in the technical action. You put the two packages together, you got something to work with, we think. We want you to figure that out for yourself. So how do you do it? Just go to our website, www.iraepstein.com. You'll see the word free offers. Click it on. Sign up for what you want. We'll take you there. You can also click here. It'll take you there as well if you're watching me on YouTube. I'm Ira. You have a good day, and I'll see you tomorrow.